Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we again will take a look at the gold market. So as you can see, gold market on Friday has shown really significant rally. So in the background of expectations, some dovish statement from the Fed, also anticipation of some negative impact from the shutdown on the government in the United States. So in general, this action stands according to our long-term view, because even on the weekly chart within the few recent weeks, we said that the upward action, upward acceleration right to the 1286 resistance looks too aggressive for a bearish trend. So if we would treat this upward action, this A, B, C, D action as a retracement, this recent acceleration and price behavior around major resistance looks too aggressive. By this reason, we have made the conclusion that this is not probably just retracement, but something greater. And in general, since we have some kind of I call it as a symmetrical model on the monthly chart, so this really could be the starting point of the long-term bull trend. And recent action confirms at least that gold is ready to go further to the upside. So, but at the same time, unfortunately, we haven't got our setup with the fake breakout. If you remember, last week we talked about the possible wash and rinse of these lows, and kind of the fake breakout of this consolidation that should provide us very good opportunity to go along. But unfortunately, the setup has not been formed. The market rallies as soon as the news on the Donald Trump signing of the temporal pause and the shutdown, and investors turn their attention to the common Fed meeting on the next week. As a result, as dollar has dropped, as gold market has rallied. Also, currently we see the big shift in the market sentiment in favor of the more dovish policy of the Fed and reviewing and adjustment of the perspective of the United States economy. So, by the recent comments, recent reports that we have discussed in our weekly research on the Forex market. So it seems that investors right now expect some positive impact from the dovishness of the Fed within the half of the year in 2019. But after that, it's really a big chance that the recession will start to show the first signs. So initially it was thought that the first signs of recession we could get only in 2020, but currently it seems that it will happen earlier because across the board here and there we see the slowdown of the major statistics, and not only in the United States and in China and the European Union as well. So this really a warning sign for economy and global economy right now. So anyway, on the gold market next week, we will be watching for upward continuation. That's first moment, and second, we need to keep an eye on the possible pullback. So it will be preferable if market will not show too deep return back inside of the consolidation. So minor retracement here it's okay, but it would be not very good sign if market will drop somewhere back to the middle of this range or even below it. Theoretically, the classical technical analysis suggests that the potential target of this breakout stands at 1320. So this is the first destination point as equals to the width of the channel. So when it has been broken, this target usually equals to the width. So the same rule as with the double bottom. Market stands very close to the overbought, but not precisely at the overbought yet. So actually on Monday it has potential to move slightly higher. And actually all that we could do here is just waiting for some minor pullback. Currently it seems that reasonable area for retracement will be somewhere around weekly pivot point, around the previous tops, and 1293 fib support. So that's area 1293, 1296, somewhere in this area. So if market will form a kind of the ABCD pattern, it could be a chance to go along with this retracement. But again, as I said, be warned, that market should not show too deep pullback. So retesting of this broken consolidation is normal, but if market will start erase this rally and turning back, dropping out of this consolidation as well, so dropping below 1287, that will be a bad sign for the bullish perspective. So that's initially we will be watching for a minor retracement. Another opportunity that you could keep an eye on the hourly chart. So actually we have here, this is not bad for us. Nothing has been formed yet, but potentially this could be a chance for the Brent bottom trade. This also could be kind of the EBC retracement. So here we could get the Brent bottom, while here we could get some kind of maybe triple to buy or something of that sort. So that being said, in just 2 words speaking, we will be watching for a bullish continuation patterns on the gold market in next week and in the beginning of the week. And we suggest that probably the area where we should get the chance for taking the long positions should be somewhere around upper border of this consolidation and around the weekly pivot point. So we do not expect too deep retracement. It will be very nice if it will be just a 30%. It's right to the 385 support area.